Hello, it's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets on the Tuesday, 12th of January 2016. This video is being brought to you courtesy of CFDs.com. Be sure to visit their website, www.cfds.com, and certainly apply for the potential £25, well, 25% cashback bonus, and certainly obviously help in your trading. Alternatively, you can visit the educational site, which I post my analysis on daily and videos, etc. at www.cfds.education. Okay, in terms of the markets then today, let's see where we actually closed, and we'll take it from there. Okay, so overall, majority positive, more than a 1.5% rise in European equities, more or less on average. The Eurostoxx and the FTSE slightly different in terms of 1% rise. In terms of chronological order, we had the Shanghai more or less flat overnight. The Hang Seng obviously weak. The biggest victim was the Nikkei, which was down almost 500 points at one time, and obviously that was a potential risk-off scenario. But the European indices certainly shrugged off that and certainly started to trade higher, which really was explained via the US markets. If I bring up the chart of the European, or should we say Asian markets first of all, daily chart of the Shanghai index, obviously as you can see here, is into critical support. The weekly chart of the Shanghai index obviously is into support, and therefore you are looking at a risk-on scenario if that's the case. Alternatively, the Nikkei quite a substantial sell-off overnight. Really, it was playing catch-up given the fact that obviously it was on holiday the day before. You do have a potential gap fill support region in this area here at 17,000, and given that it's a psychological barrier, etc., and you have horizontal support there as well, you are looking at a potential short squeeze, which ultimately basically means that you have a bottom in the Asian markets, which generally means a bottom in US markets, and obviously European markets will follow given the fact that they are obviously consumed by QE at present. Now, bringing up the Nasdaq itself, there is a inverted head and shoulders formation on the 60 minutes charts, folks, and that obviously indicates a bullish bias. Therefore, you are looking for a move higher. You've broken out the downward sloping contracting wedge pattern and looking for a thrust higher. The daily chart obviously has put in a bottoming tail, which obviously coincides with Asian markets obviously into support, etc., etc. Could join the dots together, and you basically are looking for a move higher. Okay, bringing up the S&P 500 as well whilst we're on this topic. Again, we've broken out this bearish channel on the 10-minute chart, and you are looking for a potential thrust higher. 60-minute chart, as you can see here, thrust higher again, inverted head and shoulders, similar type of pattern, creating a higher low. Daily chart, you can see that you've put in a bottoming tail, obviously, and that basically sums up the actual markets being in support, and therefore you are looking for a move higher in US markets, which obviously will follow through onto European indices. In terms of economic news flow, realistically, the geopolitics or geopolitical concerns we had was with regards to the terrorist incident in Turkey today, and that obviously did trigger off a risk-off scenario. Adding the fact that obviously we've had oil prices making new lows again and testing those lows. So if I bring up the chart of crude, for example, you can see here quite a substantial sell-off. You can see here we took out the previous low at $30. So again, you are looking at potential $30 holding, and given the psychological level, a lot of individuals potentially short covering here as well, given the fact that you have got Asian indices and US indices into support. Also, adding the fact that you have the dollar index obviously into resistance. So if we bring the chart, the dollar index, you can see that we are testing those highs, but it looks like it's going to be a potential topping tail as well. So dollar obviously chart into potential resistance, and obviously that will start to help commodities move higher. So I'm expecting a move higher. Now, copper chart itself is a tricky one. That's probably the only other commodity that certainly is a cause for concern, given the fact that we've obviously made new lows. Now, given the fact that the Asian markets, like I said, Shanghai index is into support, therefore, based on that, I would presume that this would obviously start to move higher. Also, given the fact that the dollar index obviously is into resistance. Okay. Now, in terms of economic data, manufacturing data, industrial production out of the UK was very, very weak. So therefore, that was certainly negative, net negative. Overall, we had Fed Stanley Fisher talking. We had the business optimism index basically coming in line. Red Book slightly weaker on a month-on-month basis. Mr. Carney was talking, and that was really interpreted as being dovish, given the fact that sterling obviously made a new low, and therefore that should generally be positive for the UK. But given the fact that we've had oil prices dropping and obviously weaker economic data, that certainly hasn't helped the FTSE 100 index. The US data more or less in line, UK GDP as well in line, So no real scare in terms of economic data. Really, the whole emphasis has been on the price of oil. Okay, now let's sum up the actual technical patterns in the European indices and let's see exactly where we are. First of all, we're starting off with the Eurostoxx and daily chart. You can see that we are holding potential support here. Okay, on a daily chart, 60-minute chart, we've built a base. So that base has been built at 3030, and you're looking to propel from here. You're looking for a higher low, so look at your fib retracements at 3060, 3050, 3040. Just to confirm my bias, I am currently long Eurostoxx, and I am looking for a potential thrust higher. Okay, just confirm my bias, and obviously if you want to look at the distorted market picture from my perspective, it's always good to confirm what my obviously bias is. So that's the situation and scenario that I expect at present. So Eurostoxx certainly into support. Now that's supported by the S&P Europe 350 is into support, and that's also supported by the stock 600. So if I just bring that up as well, show you again into support. So the major indices in Europe all into support, and certainly is looking to propel higher. Now that fact that we have talked about the Eurostoxx, the Euro USD certainly needs to come into the equation, because without moving the Euro USD and also bonds as well, you can't get a rally in European equity. So Euro USD still seems to be in this mini bearish channel. Okay, certainly has held resistance at 1.0970, and certainly is looking potentially weak. Now again, this does need to fall, doesn't necessarily have to fall, but certainly will help European equities, given the fact that it's languishing at this 1.08 level, 0.08 zone. That alone is sufficient enough to potentially obviously lead to a rally in European equities. Now what is interesting is that the actual ever since it's topped out at 1.0940, European equities certainly have started to potentially build a base. Okay, so given the fact that this has a base or should we call it the Great Wall of China at 1.0940, that generally means that you'll have a base in the European indices. Okay, now going back to the actual next indices now, German DAX. Sorry. Okay, daily chart German DAX. You had a potential doji candle, potential reversal signal, given the fact that the bulls certainly tried and failed with that topping tail, and the next day is a bullish engulfing candle. So that's a good sign, and you are looking at lower channel support holding. You are going to target that 10 to 10 gap at on the German DAX, and obviously you've got a gap above at 1067 or 10700. So those are the two zones that you are looking at potentially targeting on the German DAX. Okay, looking at the 60-minute of the German DAX, again you have this base being built at 10,000 or not 9,800. You've broken out of this potential. You've broken out this potential downward sloping trend line, downward sloping wedge type pattern, and you are looking again, like I said, to close that gap at 10,200. The next level is going to be 10,400 on German DAX. Okay, now if I can cross-verify the German DAX with the MDAX, you can see that the daily chart has held gap fill. You've had a bullish engulfing candle, certainly a good sign in terms of helping the German DAX move higher. Tech all share, again, since it's held that gap, you are looking for potential thrust or a move higher. Now the DAX itself will be reliant upon the Nasdaq, given the fact the Nasdaq's already put in a bottoming tail, and the 60-minute chart has an inverted head and shoulders formation. Then that would obviously help the German DAX move higher. So again, my bias will be for the German DAX to certainly start to potentially propel higher. Now you have previous resistance equals support, and this zone here at 9950, 9960 will be absolutely crucial in terms of determining the next move on the German DAX. So again, keep an eye out for that, folks. That will be very, very interesting. Okay, looking at the 60-minute chart, you certainly have an argument here for an inverted head and shoulders as well. There's your left shoulder. Obviously, you've put the head in, looking for a right shoulder here now, and looking to thrust higher. The 9800 is the potential head. Then you have the neckline at 10,000, so 10,070, 9800. So you're looking at a 370-point rally. So you're looking at around 10,400, potentially test the 200 MA here. Okay, on the German DAX. So certainly in the bullish camp from that perspective. Okay, now looking at the volatility indices in European stocks, again you have evidence of the CAC volatility index close that gap. You're looking at a potential reversal. Same thing with the VIX as well in the US. Ever since it's closed its gap, it's reversed, and that's why we had the rally yesterday. The weekly chart of, which we said the Eurostoxx, that certainly is quite volatile. So even though it has broken out, it's coming back and retesting it. So it certainly isn't it's more of a fake out rather than the breakout, and therefore you are looking at a potential wild sell-off in the volatility index of the Eurostoxx. Okay, so therefore it's bullish for European equities. Okay, the French CAC now, let's just see exactly where this is positioned. Looking at a daily chart, again, ever since it's held that gap fill, It certainly is starting to bounce, pointing a bullish engulfing candle, 60-minute chart. Same type of pattern here, folks. You certainly a very, very similar type of pattern again here. So let's just try and draw these. Okay, so you have this unfilled gap here. Okay, so that certainly is going to be the first target. And the same type of pattern as well in terms of the inverted head and shoulders. There's your left shoulder, your head's gone in here. Then looking for a potential, obviously, consolidation pattern here, and then obviously looking to thrust higher. So certainly keep an eye out for the inverted head and shoulders formation there, okay, on the French CAC. So again, that's going to be interesting, and that's going to dictate the next move in these markets, given the fact that obviously we certainly seem to have broken out of this downtrend here. Okay, so again, French CAC looking at a potential target of 4480, and then obviously you have this unfilled gap at 4630 that certainly needs to close. So certainly a bullish outcome here as well, given the fact that we have tested, we are now into previous resistance equals support on the French CAC, and looking to potentially move higher with the unfilled gap at 4480 that we can see there. Okay, the FTSE 100 now, the last index in my analysis. I can do further. I try my best to keep these videos short and sweet to make it easier for people to certainly watch and digest. Okay, daily chart, the FTSE 100, obviously you've held this key support zone at 5875. Please do excuse my voice, as you can see. That's the reason why I haven't been making videos last week, because of the cold that I was suffering, and it was a very, very bad illness, but trying to get over it. Okay, so it's daily chart 5875, so certainly observe that, and you can certainly see that we've built a base there. Again, 5875, 5885 will certainly be key. In terms of an inverted head and shoulders, yes, you certainly are attempting one here also as well. You have this left shoulder here, you've obviously put your head in there, and then looking for a potential thrust higher. So again, keep an eye out for that. Okay, so the main concept here is looking for a higher low. Okay, although having said that, oil prices certainly have been under the cosh, and certainly have been very, very weak. So certainly that's something that certainly needs to be paid homage to as well. But looking at a potential thrust higher at 6020, then obviously looking at 6080 on the FTSE 100. Okay, so that's my analysis done, folks. Certainly looking at a potential base being built in Europe, led generally by a base being built in Asia, and the US market certainly are putting in a potential bullish formation as well. All eyes will be on oil. Obviously, we're looking for a potential base, but given the fact that the dollar index obviously is now into crucial oversold territory, you are looking at a potential rally in oil as well. Other charts that are important, like I said, I don't want to keep these videos too long, is that the Aussie and the Kiwi are certainly into support. Okay, folks, be sure to visit cfds.com for your trading needs, and certainly feel free to email me and get in touch if you want to join the live analysis service. Goodbye now.